Let's go with Kevin. Kevin, I'm going to make you the presenter. Really appreciate you being a pinch hitter and stepping up for me. You have a huge audience. I hope it doesn't make you nervous. I don't think it will.
Can you hear me?
Yeah, Kevin. How are you, buddy?
I'm good. How are you, man?
Good, good. It's so great that you were able to come today. And, I didn't give you a lot of notice, so I appreciate you adjusting your schedule to address the community, I think, for the third time, right?
Actually, you know what? I was going through our history. I think this is going to be the fourth time.
Yeah, I'm on. Previous, it was on FX Street, right?
Yes, you got it.
Yeah. Okay. So in F.A.C.E, I think it's three. So I'm interested. I know your history, and I know you do a lot of great work with pivots and COT stuff. And my view is that we're getting closer to an inflection point in both the euro and the dollar for something counter trend. I'm wondering, we have the euro up here, Kevin. What are you seeing?
I'm seeing that institutions are taking profits on long positions. By looking at the COT data, I can see that they were bullish for quite some time, and they were aggressively bullish. And taking a look at the data, you could see the last six weeks they've been extremely aggressive with their longs. About 60 to 70% of their overall exposure on the euro has been geared to the long side. So there is room for them to go higher, but we're hitting supply. They're overly aggressive. So what are they going to do? They're going to take some profits. They're going to let price drop. They're going to regroup, and they're going to get back into some more long positions. That's what I'm seeing.
How are the commercials positioned in here, buddy?
Well, you can see that they are more aggressively short because they always take the opposite side. So combining commercial and non-commercial, the difference is a positive 320,000 positions. So very, very bullish.
That's bullish for the euro.
Very bullish. Yeah.
Okay. And small spec hedge funds, they still have they lightened up on this rally, or are they still pretty aggressively long?
Yeah. So as we were getting this move up here, we're hitting this area here. This is a monthly area of supply. It's pretty strong. It can break. It's not likely that it's going to happen right now, but it can. So as price was heading right up into that area of supply, Dale, what we see is that institutions were increasing their long positions right here from 236, 242, 254, 262. And at 262 is when price came right in here into this area of supply. So this right here is a weekly supply zone nested within this monthly area of supply. So once price came up here, sorry?
Go ahead. What's the upper range of that supply zone that you have there in gray?
Upper range is 125.70.
Okay, and then you have another supply area above it in a darker color.
Yeah, so this here is another weekly supply area. It's a valid supply zone, meaning by looking at the charts, I could tell that that's a valid zone that price is either going to react from, or if that zone gets taken out, then that'll be a significant accomplishment.
Yeah. Okay, so we might be headed towards the end of this particular wave. Is that the most you could get out of it with what you see in COT, and technically one more high might be it for a while?
Well, what I'm thinking is going to happen based on looking at the data and the charts is we'll probably see a move coming down here on the euro, and probably come somewhere around the 120 area where we'll see them adding in longs again.
Okay.
That's what the probabilities are.
Right. Everything's probabilities.
Right.
People, have you noticed, Kevin? There's never a perfect trade. Just higher and lower probability trades.
Exactly. Yeah.
I mean, I'll do a little mentoring right now. I've seen a lot of people trade, and they want it to be perfect in every indicator everything they watch has to line up. I think you're fortunate if you have confluence with 2 or 3 things. Not everything's going to line up, especially if you look at multiple time frames.
Right, and if you're looking for too many things to line up, then you're going to go crazy.
Yeah, you definitely start using mental stops, and your first stop will be at the mental institution. So right. Okay, so Euro is something that you're focused on. What else? Or did you have more to talk about on the Euro?
What more do I want to talk about on the Euro?
Do you have more to add on the Euro?
Yeah, so when we talk about probabilities of something happening over another, I'm looking for evidence to show me that the probability of this dropping exists, right? I'm not just thinking it's going to drop because we're hitting a supply area. I'm looking to see if there's, telltale signs that this is going to happen. And so a couple of the telltale signs here is that this area here, where institutions filled in about 8,000 long positions last time price was here, it's been removed. All right, so when price drops and starts to remove demand zones, that means there was more supply than there was demand at those levels. So when price retraces back up to the area that caused the initial drop, that tells me they're more likely than not pushing price back up so they can reduce more of their long positions and take more profits on their longs, because they were adding long from down here, you know, and they're adding, and there's only so much adding of long positions you can do until you want to take profits on those long positions. So that's what I see here. The COT report is suggesting the exact same thing. We see over the last few weeks they closed off some of their longs for profits, reducing longs from 262 to 258 to 251,000. And they also reduced shorts, which is a good sign for longs, because if they want to overall bring their exposure up from 70% or 69%, they can easily bring this up to like into the 80s. So if they're going to do that, they're going to do it one of 2 ways. They're either going to add long positions or they're going to reduce shorts. And what we see is they're profit taking on longs and reducing shorts. So all of these things put together tells me that, even if this zone breaks and we see a push higher, Dale, we're still going to be within a monthly area of supply. All right, and we'll still be within a weekly area of supply.
What's the top of that month? So you have some dotted lines at new highs. And
okay, so here's the zone that if it gets broken, then that tells me we're heading to 136s. It's 126.01.
Okay.
126.01. If 126.01 breaks, then we have to contend with this 3 and 6 month trend line that's right above it. So we might have a false breakout to the upside and then a drop. Yeah.
Okay. So isn't that dotted line more like 670 than 601?
Which dotted line?
You have 3 dotted lines. Go down. No, keep the same chart. Yeah.
These dotted lines here?
Yeah, that dotted line.
These dotted lines just represent a weekly supply. That weekly supply that you pointed out earlier? Yeah.
Okay, so where's that weekly supply come in? 2670?
Yeah, about there. Mm-hmm.
Okay, that's what I was looking at.
Yeah, right, so that's exactly a good noticing that, Dale, because what can happen is we can get a breakout of that of this zone here, hit the weekly supply, and then drop, and that'd be in confluence with that trend line. So that would make a lot of sense.
Yeah, plus the inside week have. So if we stay in this range for the week, and we take out this week's high, last week's high, early next week, and reverse, I think that'd be a pretty good signal.
Yeah. Yeah.
And end up with an outside week down.
Yeah.
That's that go around in my head, on all the medication I'm on. So, all right. So I think we got the picture on Euro. What else is on your radar?
Excuse me. Oil. I like oil for long. We hit that 70 area, which we spoke of last time on our interview. We got a push up there, and now we're seeing some nice profit taking. And again, the COT report showed us that. you know, they were, look at that, 88% of their overall exposure is geared to the long side. That's just overly aggressive. So we were expecting for the last few weeks for profit taking to take place. And we just started to see.
And weren't commercials at record short levels?
Yeah, and recently they were right back here. And over here as well. 1.4.
So the commercials, they were short early and they had to ride out $5, but they ended up being okay. I knew they weren't hedging oil above 62 because they were thought it was going to 70 right away. So you're starting to see reasons to begin looking for buy signals in crude.
Not yet. Now's not a good time to buy because institutions are taking profits on their long positions. So I don't want to be a buyer when they're looking to get rid of their longs.
Yeah, they still have profits.
Yeah, they want to make profits. You know, they've been buying since down here in the 40s and 50s. So, you know, taking profits at 70s is good, right? So now we're seeing a drop. Weekly trend line is broken. So there is no trend being held on the weekly chart. The only trend being held right now is the monthly. We got a monthly bearish engulfing right here. So that's a sign that we're seeing a push downwards now. And we got the monthly 20 EMA just lower on the charts around the 57 mark. And right now we're reacting from some weekly demand. So right now I'm sitting on my hands in terms of wanting to get in on oil. What I'm looking for is I'm looking for a move lower, ideally. If that doesn't happen, then I'm waiting for momentum to shift to the upside on the daily chart. And I want to start seeing some daily supply zones being taken out before I get excited about going long again.
Would that be above today's high?
No. For me to get in long, I'd need to see this. For me to get in long would be one of two scenarios. I need to see this weekly supply area taken out right up here. What is that, 71? Yeah, that has to be taken out before I get excited. Or if we get a push lower here.
55.
Yeah, 57s or even lower. I think this area stands a really good chance of holding. It's a really good area of weekly demand, and it took out a very important area right back here. Okay, so it did something. It did something important. This was an important area. That price was stalling, and then the institution said, okay, let's push it up. So that pushed up. So if this area gets broken, that means the forces to the downside, it'll leave some supply. Then we got this weekly area, which removed an important zone right back here, which was responded to right here for quite some time. So right here, the institutions filled in so much demand that it was able to remove this area. Really nice push to the upside. It's in confluence with the monthly 20 EMA. If price does drop down here and I start to see some really nice momentum shift to the upside, I'll get in long with my first target being the zone that takes out this weekly area of demand. If that makes any sense.
It does.
You know what I'm saying? So if this drops down here like this, it'll leave a zone here. If I see momentum shift, I'll get in long. First target will be here, second target will be here, and third target will be higher up on the charts.
So we're threatening a weekly breakout in gold, Kev. What's the COT saying about gold with it on the verge of a weekly breakout here?
So gold, so we see some profit taking again, right? They were getting aggressive with their long positions right here in January. And then we hit some resistance on the chart, and they took some profits, reducing positions from 298,000 to 273,000. And if you take a look here on shorts, they also reducing their shorts. So right now, overall exposure is 77% of their overall exposure is geared to the long side. We were at the 82 mark back in November, so there's room for it to go even higher, and that's what I see happening with gold.
Where's your next important supply zone above the high of 1366? Do you have any supply zones above that? Like
yeah, we got a weekly supply at 1390.
Okay.
Right here.
All right.
1390. It was tested really quickly over here with a massive drop to the downside, which tells me this area is gonna react again. So if we get a push up here, something's gonna happen at this area. We'll see a little bit of a move down, but I think eventually this zone is gonna be taken out and we're gonna be coming up to here.
Okay, interesting view. Are you doing anything with either bonds or S&Ps? They seem to be in the headlines, especially after that big break in S&Ps and bonds yields pressing up towards 3%.
No, I don't trade those markets.
Okay, so what else do you want to cover? Anything? I'm interested in perhaps some demand zones that you might have in the Dixie, if you cover that, and maybe USD CAD.
USD CAD?
Yeah.
Yeah. So USD CAD is interesting, this one, because the US dollar is getting weak, taking out levels, dropping, and this one's holding pretty well.
That's why I wanted you to talk about it. Okay.
Yeah. The reason why it's holding well, Dale, is because we're sitting within a 3-month area of demand. So let's take a look at a 3-month chart. All right. So a 3-month chart, we have a area of demand here, and this is demand because it took out an area here on a 6-month chart that was supply. So a 3-month area of demand takes out a 6-month area of supply. That area of demand is going to be extremely strong. So price drops into this area of demand, tests it once, comes up, hits the bearish engulf, drops deeper, and it's holding. And it's holding fairly well considering what the US dollar has been doing, like I mentioned. So what we have here is a weekly area of demand has been created right here. We came just shy of hitting that area of demand, and we got to push up. So we're stuck between a weekly area of demand and a weekly area of supply.
Where's your daily demand coming in again?
Daily demand's at 123.34.
Okay, and do you drill down any closer than daily demand zones? Do you go to like 4 hours ever?
Yeah, the lowest I go is 4 hours.
Okay. Okay, that's an interesting area. Your green bottom.
It's an interesting area.
Yeah. Mm-hmm. Okay, so where 24-ish is the next 4-hour demand zone?
Yeah, 124.26.
Okay, cool. And do you glean anything from COT on this?
Yeah, so let's take a look at the COT report. The COT report shows that the vast majority of positions are on the short side. 69,000 positions are being held short versus 29,000 long. Overall exposure, 70% of their overall exposure is geared to the short side. So that's, in confluence with the US dollar. There's more shorts than there is longs. But the thing is here, just recently, the sentiment was neutral, not as strong as the US dollar to the bear side. So I'm more of a believer at this point that we're going to see a push higher, even though the US dollar is so weak. I do think over the long term we're going to see this go higher. I could be wrong, but the data is not suggesting that. The charts are not suggesting that. This is similar to.
Go ahead.
This is very similar to US dollar, Japanese yen too. This has been holding fairly well considering how the US dollar has been dropping. The only thing is that we're dropping right towards this area of demand on the monthly chart, and it's here where I expect to see price head higher.
Where, around 102? 104?
103.
Okay.
103 area, yeah. On the weekly chart, there's a zone nested within it. 104.
Okay.
39 is where the zone starts, down to 101. So within this area, we can expect to see some momentum shift and a move to the upside.
Okay, but bottom line, a higher low above the low from June of 2016. Okay, a nice look, Kevin. Anything you want to wrap it with?
Yeah, let's take a quick look at the US dollar.
Okay.
My broker is looking for a liquidity provider, so my daily chart isn't updated, but we can take a look at the monthly. And so we reacted from that 3-month area of supply that we mentioned last time, right here. Right here, we got the drop. I said what price was looking for was a monthly area of demand to respond from. Now remember the euro. Remember we said there was that weekly zone right above the monthly that was in confluence with the 3-month trend line?
Yes.
So if you look at this chart.
Inverse here. You have the inverse here.
Exactly. Right here we have a monthly area of demand that was responsible for removing a 3-month supply zone. So it's important. And we got a 3-month trend line right here. So price can drop lower, momentum shift, and then boom to the upside.
Okay. All right. I see you have a little arrow there that says reversal. Is that where you're expecting the reversal?
Yeah, I think there's like a 60-70% chance that we see a reversal from up here, from down there.
Down here around 87.5. You have any numbers there?
87.5. So if we go in a little bit deeper, a really good area is 85.82 to 84.47.
Okay, that's way down there. Okay.
Yeah.
All right, buddy. So the best way for people to follow you?
You can reach me at Twitter, Magic with a K-E-V, because my name is Kevin, so M-A-G-I-K-E-V. Magic Kev, you can follow me on there.
Okay, I wish you continued success. You're one of the hardest working technical guys I know, Kevin. It's always edifying for you to be here with us, and thank you for your clarity and sharing your zones with us and your COT interpretations. Really, clarifies things for me and reinforces some of the things I look at and gives me pause that I didn't have before I spoke to you on a few others. So well done.
Thanks, man. I really appreciate it. Thanks for having me here. It's always a pleasure.
Yeah, so I encourage people to follow Magic Kev, and he's really a great technician, and he puts out a lot of great content on his Twitter stream, and he has no axe to grind. He's not selling anything, just wants to help people. So I commend you for your giving spirit, Kevin.
Thank you. Appreciate it.
All right, my trading warrior brother, Kevin Araujo, thank you so much for being with us today. So F.A.C.E and investing.com. You were on investing.com today, Kevin. So have a great day, the rest of your trading day. I think the dollar still has some work to do, and hopefully we'll see some signs of when it's right to reverse, and see everyone for TGIF tomorrow. And above all, don't just count your pips, count your blessings, and that's a wrap. So good hunting, everybody.
Take care, Dale.
And thank you again, Kev. Thank you very much.
Anytime, buddy.
That's a friend. When you need somebody and they step up, that's how you know you have a friend. Thank you, Kevin.
No problem, my friend. Thanks.